Hi, this is Vadim, your Flash Services Analyst. It is lunchtime, October 1st. The markets are having a busy day. We have a sell-off in stocks. Things are moving, and here at the Flash Services, we've had a busy day as well. We have issued a new alert for gold. We issued an alert for SPY, Amazon, and GM. But I wanted to direct your attention to an alert that we closed yesterday for the ETF with the ticker symbol REMX. We first opened this alert on September 11th when this market was trading at 38.62. Yesterday when it was trading at 46.44, this alert was closed. And I wanted to give you a glimpse at our reasoning. So first of all, here's the chart that our ETF Flash subscribers saw on September 11th. As you can see, this market was progressing lower in a large degree wave 3. This was a wave 2 top and wave 3 in progress. Not only that, this was a wave 3 of wave 3. So this was the hardest, the fastest part of this developing Elliott Wave pattern. However, on September 11th, we noticed that EWAVES was labeling the September 10th bottom at 36.01 as the end of wave 3, implying that a wave 4 correction should come next. So we issued the alert looking for this market to go up on September 11th at 38.62. And it took a couple of days for this market to get going, but eventually the rally did develop. Let me show you now the picture inside EWAVES. This is the data through September 30th, last night's close. Here's our wave 3 bottom, and here's the rally that followed. Now, when you look at this rally, you can count waves 1, 2, and wave 3 in progress. So why did we suggest closing this alert yesterday instead of waiting for the prices to go even higher? Well, first of all, every Flash subscriber has complete autonomy in their decision making. They are free to act on our alerts or not. So if someone wanted to stay in this market longer, they certainly had the opportunity to do so. From our perspective, the reason why the safer choice was to close this alert had a couple of reasons. One, the rally from 38.62 to 46.44 were $7.82, or in percentage terms, just a little over 20%, which is more than just a few peanuts as market moves go. Another reason is because when you look at this chart, you see that yesterday the price entered this area of consolidation. Looking back at this decline, this ETF went sideways for a few weeks back in June and July of this year. So there was a good chance that when the rally had come into this price range, there would be some natural level of resistance in this general area. So there was a good possibility that the prices would get stuck for a day or two, or maybe a few weeks, like they did here. And in fact, you can see that EWAVES is labeling yesterday's rally as the top of wave 3, and the developing decline as an ABC correction, with yesterday's low as wave A, implying wave B to the upside, and wave C even lower. Now we know that according to the rules of the wave principle, if this is indeed a developing wave 4, it cannot overlap the top of wave 1 at 42.77. So we'll closely monitor this move, and if the market indeed puts in an ABC correction which ends above this wave 1 high, and the general Elliott Wave labeling does not change, there's a good possibility we'll be issuing another alert for this ETF to the ETF Flash subscribers. And a third reason why we thought that closing this alert yesterday was a safer choice is because of this larger picture that we discussed earlier. We have to remember that this is still a wave 3 decline according to this labeling. In fact, again, this was a third wave of a third wave that just ended. And if there's one thing about third waves is that they just keep on going. So maybe this rally really is the beginning of wave 4 correction to the upside, which might push the prices as high as the price territory of wave 4 of one smaller degree, as the rules and guidelines of the wave principle suggest. Or maybe this will be a flash in the pan that will get completely retraced back to the downside. The general thinking here at the Flash services is that not every flash alert works out. And when the market is kind enough to go in our favor this far and this fast, the safer course of action is to simply say thank you and wait for another opportunity. And speaking of those, right now we are watching 10 potential opportunities across the futures, ETFs, and stocks markets. And of course, every time we tweak an alert or open a new one or close an existing one, you, the Flash subscribers, receive an alert by email or by text message. So you're never in the dark about what's going on, which is also the reason why I record these videos, to give you a glimpse at our thinking here at the Flash services. And by the way, if you're not a Flash subscriber and you're thinking about becoming one, go to ElliottWave.com, click on subscriptions, and choose Opportunity Alerts Flash Services. Thanks for watching. Have a great day. I'll talk to you again soon.